Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you some trading levels for some popular stocks for the week of November 27th, 2023. This is the week that just follows the Thanksgiving holiday, and I hope everybody had a joyous holiday. So let me before we begin, the usual disclaimer: everything I'm about to present to you is for informational and educational purposes only. Precision Trading Labs, we are neither money managers nor financial advisors. All right, so let's take a look at the charts here. So we'll start out here with Apple. And in fact, as I'm going through this, I would invite you to pause the recording and take some screenshots and plot some of these levels out for yourself and see how they square with how you look at the market. So here's where we are currently as the week has just started here. We're sitting at around a little over 190 on Apple. In terms of where we are in relation to what we consider at PTL quality trading levels, we're more or less kind of in between supply and demand here. So what do I mean by that? Well, if we look right here in the box that I just threw in here, price rallied up here, consolidated, and then notice then we had this green candle here, a very bullish candle that then immediately popped out of it. There was a pause, and then prices kind of popped since then. Okay, so this is an area where within this region here, and let me in fact blow this up a little further. This is an area here where there was an exhaustion of sellers. Okay, right within here for this, basically for these 2 days, we had buyers and sellers that were more or less in agreement within this relatively narrow range of, let's say, 181 and change to about 183 and change. Okay, so they were in agreement, and then obviously then they went out of agreement because price popped out of here. And what happened was there was an exhaustion of sellers. No one was willing to sell anymore within this range. Okay, so for about 2 days they were, but then no one was willing to sell at that point. And so for these trades to now have occurred ever since then, what that implies is that buyers had to run up the price chart until they encountered willing sellers. Okay, and so that's the narrative here. We have an exhaustion of sellers, price, and then buyers ran up the price chart until they encountered sellers. Okay, and so if we can now back off here and go back to the main view here, okay, the expectation is when price returns here, okay, where supply and demand were in agreement here, what happened here is once price left here, there was only demand for shares in this range, but there was no longer any supply. And because price basically spend a relatively short amount of time in here, there's the expectation when Apple returns to this region, we could expect to see another round of buying. Okay, and so that's the narrative that goes along with this. And when we refer to this region, as a demand zone, because within this zone, supply and demand were in agreement, and then once price popped out of here, all that was left here was demand. And so as a result, we refer to this as a demand zone. Up here, where price rallied, consolidated, and then dropped with a lot of energy here, okay, this is the exact opposite of what I was discussing before. This represents an exhaustion of buyers here. And here, essentially, what happens is the sellers ran down the price chart until they encountered willing buyers. Okay, so here the buyers run up the price chart until they encounter willing sellers. Here, the sellers run down the price chart until they encountered willing buyers. Okay, over here, supply and demand were in agreement, and once this occurred, all that was left here was supply. Okay, over here, supply and demand were in agreement, and once there was that very energetic pop, all that was left here was demand. Consequently, this is a demand zone. That's a supply zone. Okay, and so when Apple returns to this region, again, we're going to be looking for another round of buying here. Okay, so here's the summary. of what I just went through. Okay, here's your demand zone here. Okay, it's characterized by a clear, abrupt exhaustion of sellers in the range, and then it's followed by an energetic bullish move. Okay, as the buyers ran up the price chart to find willing sellers at higher prices. Okay, so that's that. And then over here again, the same exact thing, just turned on its head. Okay, right here, this is characterized by a clear, abrupt exhaustion of buyers in the range, and then an energetic bearish move as the sellers ran down the price chart. And again, when price returns here, we would be looking for another bearish move down from this level. Okay, so in terms of the level, this is about 2.5% above where we are now at 195.5 or so. And in terms of this level right here, this is a little less than 4% down. Okay, and in terms of the actual level, this is at around 183.50, and the bottom line here is at around 181.50. Okay, so that's what that level right here is. Okay, and then this one down here, this is more of a pivot on the daily chart. However, if we drop this down, excuse me, to a 2-hour level, this would be an area where we could also expect a bounce down there. Okay, so if this thing would actually go further down, that's about 7% down. Okay, but the level that's near term here, this one's about a little less than 4% from where we are at current price. All right, so that's the story with Apple. If we then drop down to Amazon here, okay. So here's where we are now. And if we go back in time till we find what preceded this here. Okay, notice that green candle and then that consolidation, and then notice that very, very bearish candle, and then another bearish candle, and then there's a bit of a pause, and then another shot down. Okay, and then obviously, and then that begins this major swing that occurs here. Okay, this is an area of supply. Okay, this is what we just talked about on Apple. So this is similarly, that's an area of supply here. Again, if price returns to that region, we would then be looking for to express some sort of bearish trade out of this zone here. And I'll go into that, in fact, when I go to the next chart. Okay, but in terms of where this supply zone is, this is about 3% above where we are now. Okay, at about 149 to 154, that's about a 3% move to get there. Okay, and then in terms of demand, here's a demand zone right here, and then also right here, this is also a demand zone that I'm going to throw in right here. Having said that, structurally, and this is kind of what we go into, in terms of our program and everything. This is not quite as high a quality level as the level down here. It doesn't mean that this thing can't work. It's just that there are some concerns about that. Okay, but this one is closer to where we are now, and that's about 6% below from where we are now. And then again, the better zone here, but that's a long way down, is almost a little less than 10%. So what we would end up doing is, not every chart, at least the way we look at it, has necessarily a near-term quality setup. And so at that point, we set alerts on Amazon, and there's nothing that we're really dying to trade on Amazon, at least on the long side in the short term. In terms of the supply zone on Amazon that I showed you just a minute ago, this is actually a level that we do like a lot. And so this would be definitely an area that we would looking for to express a bearish trade from. But having said that, on the long side, there's really nothing short term that's quality. So we would be looking for, again, a bearish trade on Amazon if this thing rallies. And if it starts to drop, we'll just wait for other levels to form or for them to get closer to the levels that, particularly this level. All right. So that's Amazon. We take a look at Google. So here we are on Google. And so I'll show you the zone here on a couple of the supply and demand zones, and then we'll actually talk about how we would express a trade here. Okay, so let me move this over just for a second here. So, and you can see this is actually looks relatively similar to what we just saw on Amazon and Google, because these are all very large cap NASDAQ stocks. And so as a result, a lot of times their charts will, they certainly aren't identical, but as the expression I like to use is that they rhyme. Okay. And so again, this is that same level that we've seen on those other charts here. So that's about 3% down here. And then another really, high quality level is right here at about 8.5%, 9% down there. Okay. Okay. Then above, this is an area of resistance, but it's not supply. So what do we mean by resistance? This is an area where price has come up and has gotten rejected from it multiple times. It's just that the fact that it's not clean demand that has not been touched. And so as a result, we then now start to think of it as more like resistance rather than clean supply. Okay. And so I'm not really in love with shorting anything up here, particularly we're also looking at the 52-week high here. Okay. But down here, in terms of expressing a bullish trade, this would certainly be an area. These would be areas that we would be looking to do that. Okay. So what do we mean by expressing a trade? Okay. So in terms of the demand zone here, how we would express a trade over here would be the most straightforward thing, of course, would be to simply buy the stock. Okay. But another thing one could do to express a trade from demand would be to buy a call. Okay. And you could buy a call, of course, at the money. Okay. Let's say when it gets down here at 134. Okay. So 134, 135 would be at the money. If you bought a call, let's say at around 130, that would be a call that would be relatively in the money. And of course, if you bought a call, let's say at around 137.50 or 140 or whatever, then of course you'd be buying a call out of the money. Okay. So those are all different ways one could express the trade from demand. And of course, it would be the same exact thing from supply, except you'd be using puts rather than calls. And then other things you could do, you could also utilize spreads in terms of doing let's say out of the demand zone. You could do a bull call vertical spread where you you buy a call at a lower strike and then you sell a call at a higher strike. And that makes a gentler trade that's less responsive and also lowers the premium. And then lastly, one can express a trade by collecting premium by doing a vertical credit spread. In this case, of course, you'd be utilizing puts for that out of this demand zone. Okay. So that's the story with Google. Okay, so this demand zone at Google is about 3% down. In fact, actually now if I move this line here, it's a little more than about 3%, about 3.25% from current price. Okay, so that's the level where we'll be looking for to express a bullish trade out of Google from Google. If we look at Meta or Facebook, you want to go by the old name. So here are your zones from where we are. Okay, so right here, here's an area of demand, and this actually shows up even a little clearer and a little cleaner when we drop this thing down to a 2-hour chart. Okay, but around 320, from about 315 to 320 on the daily here, this is an area of demand. Okay, so we're about 5.5% below where the current price is here. And so this is where we would express a bullish trade for Meta. And then above here, okay, the nearest area of, in fact, actually, this is not even supply here. This is all resistance. Okay, we can see price came up here on that pivot, dropped. Okay, notice then it comes back multiple times. And so it's a clear area of resistance here, but we would not consider it to be a clean supply, certainly, where we'd be looking for, where we'd be looking to express a bearish trade. In fact, this would be actually a prime area that if price drove into it and it actually then started to go beyond the top line of this area, this zone of resistance, this would then actually become a prime area for a breakout trade. But what we would be looking to do would be to look for resistance to be violated, and then to essentially then do a breakout trade above this line here, and that's sitting at approximately. If I slide this over here, okay, so that's around 355. So if we actually got above, let's say, like 356 or so, this would probably be an area, particularly if it drove through here with some energy at around 356. This would actually be an area that would be good for a breakout trade to the upside. In terms of what's below here, this is again that area of demand here. Is that 5.5% down, and that's where we would express a bullish trade. And lastly, we'll wrap up here. Let's see, Netflix. This is an area there was a rally, a base, and a drop here. We're now stuck in a supply zone here, but in fact, this level has really only done half of its job. We're kind of sitting here in the middle here, but it's actually not really doing much of anything. And in fact, the longer this stays in here, the more likely this is probably going to break, if in fact the market itself kind of holds together. So there's nothing I would be looking to short here. Again, if we get a pullback here, these would be areas that we would be looking to express a bullish trade. Okay, and so there's nothing really close here. Okay, that's about 6.5% down. Okay, this other one's probably about almost 9% down. So this is nothing on Netflix that we're in love with here. And then the last thing here on Tesla, I think we also have some waiting that we would need to do here. Okay. Okay. So right here, here's where we are now. Let me just update this here. So this is where we are currently. So we're about this is about 5% above where we are now, and below here in terms of demand. This on the daily chart, this is about 9% down right here. Okay. So again, nothing near term. Obviously, I'm sure, one could certainly drop this thing down into, a 15-minute chart. And I'm sure some people would certainly find some little tiny levels in here that one could scalp out of. But in terms of the things that we typically like to do, which are kind of short-term swing trades using options, we tend not to use these little micro time frames. Typically, we like to more or less use daily and 2-hour. And then occasionally 1-hour levels as well. But really, we generally don't drop below that. So again, these are the areas that we would be looking to trade off of Tesla. All right. So at any rate, thank you for spending time with me here. I do hope you found this interesting and helpful. Again, take a look at some of the, if you happen to do screenshots in this, definitely plot out some of these zones and see how they square with how you look at the market. Also, if you would please subscribe to our YouTube channel, and also if you look in the description there, you'll see there's a link. I'd be delighted to do a very brief call with you and to tell you a little bit more about the supply and demand concept, as well as what we do here at Precision Trading Labs. So again, thank you for the privilege of your time, and I will see you guys next time. Take care. Bye-bye.